Morning, afternoon, or evening, wherever you are. Hope you're doing great today. Welcome to this week's session of DappRadar Market Movers. I am Pedro, the host here, and we have just published 2 days ago our Q2 Dapp Industry Report, where we dissected and analyzed the most important trends and insights that affected our industry over the last 3 months. And today we will center the discussion around one of these relevant events that happened in Q2, and we're talking about the effects and the shockwaves that the collapse of Terra has left behind across the interconnected industry. To talk about these Terra effects, I want to welcome Boris Ribo, research analyst here at DappRadar. How are you doing today, Boris?
Wonderful, Pedro. Thank you very much. Always glad to be here.
Happy to have you here as well. Just before we start, I want to remind everyone here that, as always, we'll be recording the session so you guys can listen to this or any of our previous shows on DappRadar's YouTube channel, where you will also find hundreds of educational videos, market updates, and content from our other shows. So, without further ado, let's begin. On early May, Terra, which at that time was the second largest ecosystem in DeFi and a burgeoning one, suffered a terrible collapse. The stablecoin existing in that ecosystem, the UST or US dollar Terra, started to depeg from the dollar, losing value and was traded as low as 30 cents. To try to save their ecosystem, Do Kwon, the Luna Foundation guard, and all the Terra members started to sell and mint the Luna towards infinite. Basically, a lot of Luna was minted, a lot of Luna was created to try to save the USD from going to zero, but that didn't result and it only sent the value of Luna towards zero. Then Do and the LFG also started to sell 80,000, as much as 80,000 Bitcoin, also to try to relieve some pressure for the damaging ecosystem. This, of course, created a lot of shockwaves around the industry. And Boris, why don't you start telling us a bit what were the main effects that were felt around the industry around that Terra situation?
Well, evidently, one of the first ones that everybody saw is I can't say collapse, but the significant drop in the value of Bitcoin. Naturally, because pretty much all the assets that are on the blockchain are in some way correlate with the price of Bitcoin. This saw the spiraling effect of many other cryptocurrencies. One of the main ones as well is Ethereum, and because Ethereum has got a very significant infrastructure in of itself, um, since the price of Ethereum was also heavily depressed, it had a cascading effect on the actual infrastructure, which meant the decrease in TVL of many DeFi projects. It also depressed the floor prices of many NFTs, and this effect, of course, then propagated onto many other blockchains.
So first, the simple action about Terra Luna Foundation Guard selling 80,000 Bitcoin, it created enough sell pressure to bring the price of BTC down, right? So we know what happened if the price of Bitcoin goes down. The entire industry basically start to also go down. So that is what we saw at the first instance.
Yes, absolutely. And then because, as previously mentioned, the price of Bitcoin fell down, not only was the depressing effect on the rest of the industry, but it also undermined for many people the trust and the belief in the Bitcoin and cryptocurrencies in of themselves. Because for many, the case for Bitcoin was as a state of digital gold, and countries, for example, like El Salvador, made a very significant bet that Bitcoin will be the future. Unfortunately, for many people who made that bet, uh, uh, well, they only lost money if they sold, but their paper losses were immense in that.
Yeah, it's the Salvador situation is a bit unfortunate. Although I'm pretty sure that the president is betting on Bitcoin being long term, and this is what it's about. Like, if you think about these assets, these crypto assets in the long run, like I'm talking about 5 to 10 years, like yeah, the price collapsed 70% since the start of the year, but it's still 100x from the prices we saw in 2014. So the price has grown like 20 or 30 times since 5 years. So this is the time of horizons that we are speaking about, a bit of long-term sustainability. But it was not only about cryptocurrencies and crypto prices. The effects of the Terra collapse started also to felt in other parts of the industry. And I see a couple of hands raised. Just allow us just to introduce the topic, and we will give you some time for the questions. Um, we saw effects also in centralized lending platforms. These basically are projects where you can lend out your Ether, your Bitcoin, and start receiving interest, similar to what we see in the banking models, where people receive interest for their money that they're lending to the banks. So these centralized platforms called CeFi, centralized finance, also started to see some dubious activity. Do you want to explain and elaborate more on that?
So the CeFi basically goes, as you mentioned, the CeFi centralized lending exchanges, and they basically, like in the traditional financial markets, where you borrow money, and that money that gets invested, and the proceeds or investments are used to pay the other person back. The centralized finance essentially do the same thing to various other companies, and that with the hopes that they'll be paid back should the investments go successful. Unfortunately, what happened was is that many of these companies then, when they lend out in cryptocurrencies, and one of the major borrowers was Three Arrows Capital, many of these companies then did not see a return of their lending, because unfortunately Three Arrows Capital has filed for bankruptcy, and this was unfortunately the case for many others who invested that currency.
Yeah, the Three Arrow Capital situation. Oh my God, it's going to be interesting to see how it unfolds. But going a step back and talking about centralized finance, some examples of these platforms are Celsius, Voyager, BlockFi, Genesis, Babel Finance, and many more. They started basically to say to their customers, guys, we are really sorry, but you're not going to be able to withdraw your funds at this time. Um, so imagine that you lend, or you have yielding 3 Bitcoins inside Celsius, and the next day you wake up and see an email saying that you're not going to be able to withdraw or make any operation with your funds. Of course, that's frightening. And this is what started to happen. And the first one actually to do that was Celsius. And just a bit of background on Celsius. Celsius have committed around 15 million. They purchased around 15 million in Luna tokens in Q1. So when the collapse of Terra happened, they lost millions, and the position basically was worth less than $1,000. So they lost a lot of millions there. They also had a problem when the Badger DAO was hacked in December. They lost around 15 million in Bitcoin, and they were also having some financial issues already. So the Terra collapse puts them in an awful financial position. So they were forced basically to pause all the withdrawals because they didn't have liquidity to pay for all the requests that people were making in their platform. And the same situation happened with BlockFi and other lending platforms. And this has early reminiscence to something that hopefully it's not the same, but we saw in 2008 the Lehman Brothers, and I guess you are very reminiscent of that event, Boris.
Yeah, I mean, Lehman Brothers was essentially the not the actually, yeah, I think it may be called one of the biggest and most successful Ponzi schemes, where essentially for the longest time, the Lehman, sorry, um, trading company for 20 years, they've been promising their investors a steady return of 20% per annum, which is good in any market. Because and because pretty much all the institutional investors, Citibank, Bank of America, and many other hedge funds who have invested in them, they had no shortage of investors. And then eventually, when they failed to pay up, naturally the spark that initiated everything was the bank run related to the 2008 mortgage crisis.
Yeah.
And when they failed to pay up to their debtors, then that initiated the bank run, and we know the history that yeah.
And what we see
Yes, sorry, go on.
no. I mean, what we are seeing now is also similar to what a bank run is. And for those of you who do not know what a bank run is, basically is when too many people at the same time are asking for money to the bank. So the bank basically says, we have no money to pay you. We have no liquidity at this moment. So this is what exactly happened with all these centralized finance platforms. They didn't have money to cover the requirements of the customers.
And naturally, when that happens, well, the greatest irony when Celsius started is they were essentially advertised themselves where the customer had complete and total autonomy and control over their wallets, and essentially you could withdraw any amount anytime that you ever wanted. And but when push comes to shove, unfortunately, they reneged on their promises.
I
And in
totally
this
agree
case,
with you.
I mean, on the one side, I completely understand their policy, because if they were essentially to give away all their liquidity, then they might as well file for bankruptcy.
No, and this also shed some light that these companies were actually over leveraged. They were offering more than what they really have, and it's also clear that there was really poor risk management here involved. Like people, they didn't have proper risk professionals managing their portfolios and their models. So yeah, it was really clear.
I would say, I mean, this is the bane of every investor, is when people start getting all, and unfortunately, I'm also prone to this, but it's unfortunately tragic that even people who are managing billions worth of assets are also not immune to this. And is when you get too overconfident, and then you had the gold run. Because, for example, let's take Three Arrows Capitals. They had many successful investments under their belt. They had Avi. They had Terra Luna before it. Unfortunately, went downhill, but at the time it was a very successful investment. They also invested in uh, Solana, Aave, DXDY, many other successful projects. And what else? I'm just looking at the website. So yeah, they're a bit Starkwave, Axie Infinity as well, and to the point where they thought to themselves that we can do no wrong, so might as well start borrowing money, because everything we touch, we have the Midas touch. Everything we do just turns to gold. So might as well get us more money. And yeah, unfortunately, the results were in the end what they were. When many creditors came to collect, unfortunately, because all this assets got liquidated and made worthless, they couldn't pay the creditors back.
Yeah, and I could say it's kind of a vicious and non-ending cycle, because a few weeks later, rumors start to surround Three Arrows Capital, a very important a venture capital fund that was focusing a lot on crypto projects. They got a lot of early seed investments in layer ones like Avalanche, like Solana, and so on. So they got also a lot of money committed into that. But also, you said that they were also invested and they had relation with these, CeFi platforms. So this is basically a hand-to-hand effect, like a vicious cycle, a dead spiral. So the issues that started to surround the centralized finance platforms then started also to show up in the Three Arrows novel. So it's also proof that the industry is more interconnected than we actually think. Um, and what can you tell us about Three Arrow Capital? You have anything additional insights on that?
Yeah, I've personally been looking into them for the past couple of weeks or so when the situation started unfolding. So the company in of itself has been, as I previously mentioned, very influential. They some of their they have at the height they had around 10 billion assets under management, and the company itself, some of the best projects that they invested in was Avax, Near, the Aave liquidity,
Yeah,
sorry,
DeFi protocol.
DeFi protocol, Derabit, Starkwave, Terra Luna, of course, and Axie
Yeah, exactly.
Infinity.
Yeah, I mean, yeah, they were really, really invested in Terra. They were really invested in Avalanche and Near and these layer one blockchains. But of course, the collapse of Terra also wiped out millions in their liquidity. So they put them already in a precarious position.
Unfortunately, also is that the founders, uh, mainly, and I apologize if I mispronounce, but Zhu Su has been a very controversial figure, and he's got his own share of controversies. And some of the things that people have said about him is that allegedly he's been involved in, because he's got a platform, at least on Twitter, at his height of nearly 500,000 followers. And even
Yeah.
accounting for bots, that is a lot of people following a particular person. So it would be not a stretch to say that the person has a certain market manipulating powers. So,
Mm-hmm.
and again, this is alleged, but some of what people have said is that at a certain point he's very pessimistic and fudding about the prospects and possibilities of Ethereum, thereby forcing a lot of his followers, well, not forcing, but certainly informing his followers to sell Ethereum, depressing its price, and then buying it while it was cheap.
So
Same with
basically, similar to a pump and dump scheme, where basically are they South Koreans? Is Three Arrows Capital also South Korean? Not right. I think it's based on the Virgin Islands, but I don't know if this founder Yuju is also is he South Korean or is he
Yes,
Chinese?
yeah, no, he's well, at least he's a resident of South Korea, and he's currently under investigation by the South Korean
Yeah.
authorities.
Hopefully, in the end, it's not a cousin of Do Kwon. Like, hopefully. Yeah, but I think that the BC is formally funded on the Virgin Islands or the Cayman Islands, one of these tax paradises. But I mean, it's still interesting to see how it unfolds. So I think you were telling us about the pump and dump schemes that this person was trying to perpetuate. And from what I understand is that with this 500,000 user base, Twitter follower base, sorry, he basically go out and say Ethereum is going to die, Ethereum is useless, Ethereum is nothing compared to other blockchains, and then 2 or 3 days later, the price starts to go down, and this guy purchased a lot of ETH, and then 2 weeks later he goes out and say, "Oh, Ethereum is the best. Ethereum is the best technology ever invented," and so on. So the price goes up, and then he dumps ETH, and so on.
Yeah,
So
and this is not something that happened like far away. This is just something that happened in November of 2021. So it's only a half a year away. This is not a story of 2 years ago. So
Yeah,
he still had a lot of proceeds from that, again, alleged, because it's very hard to prove if any of it
of
was
course.
any fallout out. But nevertheless, that's one speculation that people have shown. On the other hand, is the way that Three Arrows has been managed, because there are different funds, and different funds have structures in the way that they're regulated. In the sense that if you run a hedge fund, you, of course, your priority is to preserve, well, hedge, it's in the name, is to preserve the value and bet in such a way that you're trying to account for all possible circumstances in order to preserve the value of the investments that you're managing, and of course, if possible, also generate profit. So all your risky investments have to be offset by some other safer investments, and every risk has to be meticulously calculated. So they were not managed as a hedge fund. They were also not managed by as a venture fund, because a venture fund also has to adhere to certain principles. What's more likely is that in the way that they invested is more akin to uh, well, in plain terms, it looks a lot, or at least it looked a lot like gambling, where they essentially over leveraged themselves by not only investing all the monies that they had under management, but also borrowing heavily above their margin
Yeah.
to invest in many other different projects, hoping that numbers only go up.
Yeah, I mean, I don't want to say gambling, but high risk operation and poor risk management is really
Yeah,
clear. And what it's a bit of concern to me is that, of course, the group failed to answer the majority of the margin calls to centralized platforms like BlockFi and Genesis. Also, yeah, forcing these CeFi platforms failing into liquidation and so on. And also, as I said, and you said also previously, Three Arrows Capital has a lot of seed money invested in projects like Aave, like Avalanche, like DYDX, and other DeFi projects. So they just filed Chapter 15 bankruptcy, which in the United States basically prevents creditors from
seizing assets.
seizing the assets and forcing them to pay the debt. But still, at some point, it's very probable that Three Arrows Capital needs to pay debt, and how they're going to get liquidity it's by selling tokens. And since they got tokens from Avalanche, Aave, and these projects at a very early stages, they got these their positions into a really good price. So they probably are still really in a very profitable territory. So they are going to sell a lot of ABATs, they are going to sell a lot of Aave, and they are going to sell a lot of these tokens. And it can create sell pressure similar to what we see with Celsius Luna and Bitcoin, where the price of these assets start to go down. Of course, there are more fundamentals that support these tokens, like the tremendous growth of Avalanche, the burgeoning and multi-chain approach that Aave is having, extending to layer twos to other layer ones and so on. But still, it's very probable that these tokens face sell pressure and the price starts to go down.
Yeah. What's also more concerning, personally, and the research, again, this is alleged, but nevertheless, this is also quite concerning, is that supposedly Three Arrows Capital not only provided seeding and investments to many other burgeoning projects, they also provided treasury services at around 8% per annum.
Oh, like
Yeah. So naturally, because they have the keys to the treasury to many other projects that were under their control, well, because now it's technically their assets. So I would be worried that this would also have a cascading effect on many other projects in the sense that they would start liquidating their positions of essentially the protege assets, sorry, the assets of the protege projects that they were supposed to provide treasury services to. And that can, of course, have a cascading effects on many other tokens, and liquidity is also being depressed because they will essentially be dumped severely on the market.
Yeah, so from this, I think we can learn two valuable lessons. One is the value of self-custody in the space. I know that the yields might be not as enticing as these platforms are, but there are options to get yields in wrapped Bitcoin in different DeFi projects, including Maker, including Curve, even including some BSC products and Avalanche as well. So it's important for us to understand what self custody means, to educate ourselves in the sense of how do I properly manage a wallet, how do I make my wallet secure, and how do I practice and interact with Web3 applications in a secure way. So that is one, and the second one is really let's do our best and do our best research in the projects that we are investing, because we are seeing that the industry is way more interconnected than we originally thought. One falling piece in one project can has a cascade or domino effect across the entire industry. So it's really important to know where we are putting our investments in, and most importantly for me is having control over it, right?
Absolutely.
Yeah, maybe before we jump into NFTs, I don't know if there is. I saw a hand raised on the audience, Sharpie. If you want to jump into the um, yeah, into the huddle and ask a question or join the conversation, feel free. In the meantime, if there is any other question, or while Sharpie joins, the event also, yeah, good.
There they are. Hello, Sharpie.
Hello.
I mean,
So,
how are you doing?
yeah.
Good.
So, what kind of
What's
question do you have for us today?
Where do you think the NFT market's headed right now?
The NFT market in of itself right now is in a very interesting stage, personally. Um, because as I said, a lot of NFTs are highly dependent on the underlying tokens or the blockchains that they're minted on. We see that in absolute value, if we're counting in US dollars, that of course the floor prices for a lot of collections have severely decreased. And what this has done, and this is probably going to be the effect in the future, is that we'll see only the blue chips, only the big dogs staying in the market. And we're already seeing it now that in the most traded collections for the past, for the majority of June and probably for many months to come, we're going to see the same names. It's going to be Basie, CryptoPunks, Azuki, CloneX. So those are the collections that will be there. The new collections that are going to be created, well, I think there's going to be fewer of them, but they are all going to be very solid in the sense that the offering and the utility that it offers are going to be much more profound than when we saw before, because they're going to be competing with established and very successful collections, and their value proposition has to be very great and very interesting to compete with them. I mean, we saw some of this already with Moonbirds, and they did something completely interesting. They flipped the script on many of the traditional practices. We saw this with Goblin Town, where they just said, you know what, we're not going to dox ourselves. We're not going to have a roadmap. We're not going to have to do anything. Literally, just everything that you think you shouldn't do in an NFC projects, they did, and they're doing fine, and they're more power to them. So personally, in terms of token value, we saw that especially in the latter half of this month, a lot of even blue chip collections started to recover. Like, for example, Meebits, after the 20th, it grew by 76%. BC grew by 23%. And CryptoPunks grew by around 40%. So we're going to see the actual ETH and underlying token for many collections start to recover and to offset the losses that they have in terms of absolute value in dollar value of the NFT. I hope that answers your question.
Yeah, me personally, I've been getting into the Top Shot NFTs, and I through Radar, I've been watching the volume pick up on him, and I went on and went through the website. I was just completely shocked of how much they depreciated. So, I mean, we're talking about people selling $25,000 NFTs that they paid for, I mean, 6 months ago for $500, you know.
Yeah, the case of you're talking about Flow's NBA Top Shot, right? So, I mean, the case of that type of collectibles is quite different from what Boris was describing. I mean, these encompass mostly the avatar market, about the doodles, the cool cats, the bored apes, and so on, which
Yes.
Boris is totally right. But let's also remember that, for example, there are specific projects like the NBA Top Shot, the same NFL All Day, and other type of collectibles found in other blockchains that behave completely different. Talking about the NBA Top Shot, you will see, for example, the regular, well, yeah, the season has just ended, right? So probably the hype and the demand for the assets is not the best time right now. Actually, it's probably a good time to invest and pick up low money investments on cheap cards, on cheap moments. And when the season is about to start around October, you could see how the volume starts to pick up, how some moments start to gain value. Same happened with the playoffs around April or May. When the playoffs start, you will see again volume picking up. Also around February, when the All-Star game is happening, it's very much about cycles, and actually it's similar to the entire NFT space. But talking about this type of projects, you can easily identify their own independent cycles based on the seasonality of the project that you're talking about. In this case, the NBA. But it's also true that if you take a look at the price of the moments that they were selling 1 year ago, it was a bubble. It was a hype. Basically, all moments were selling like hot bread for a lot of money. And now there is a good market. There is collectors market for that, but the market has been a bit more mature. They are not overpaying. There's still a good value in there if you find and you are lucky enough to pick up or pull out from the packages a rare moment, a hollow moment, or such. Like, you could get really good money, but it's about more timing up the cycles and really picking up your cars and collectibles to really make profits on it.
So the question of barrier for entry. I mean, previously in the last years, many NFTs became so expensive that they were only affordable to the cream of the crop and the toppest of whales. When the market is heavily depreciated, a lot of NFTs and collections prior to unaffordable to people have now become affordable. I mean, we've seen many collections, at least on Solana, for example, we've got like primates, OK bears. A lot of them just, they were worth like a couple hundred dollars when you convert them in hard currency, which is a lot more affordable to where we were a year ago, where a starting price for many NFTs was like a couple of thousand.
Okay. What do you guys think about the NFTs on the VeChain platform? I mean, VeChain and
Yeah.
NFTs. Yeah.
To be really fair, I mean, activity is a bit picking up there, but I haven't analyzed in depth. I mean, I could not tell you at this moment, let's say, an objective opinion about whether there is potential or not. I think there is increased activity in other blockchains, like, for example, Tesos and Avalanche, but still, BitChain a bit slow. If you give me 1 minute, I can tell you actually how the performance in VeChain, or if you, Boris, has have now visibility on what's happening in VeChain. But it's more about finding value and finding true community. For example, Cardano NFTs are, I'm seeing really bonded community, strong community picking up. Whereas on VeChain, not really. More on Tesos, more on Avalanche as well. Even Flow too,
Yeah.
Polygon
So
even. But
if I may just quickly interject, just throwing in some hard stats there in terms of performance. Then quarter to date, VeChain has, in terms of unique wallets by protocol, we've got for the whole quarter 77 unique wallets, which is a drop of 32% from the previous quarter, which had 113. And year over year, it's a drop of 63%. So it's not exactly the most developing blockchain when it comes to just apps and users.
Okay.
yeah, that's
Thanks.
actually a good point.
Yeah.
As far as DeFi, let me look if we have anything related to DeFi and
No, but it's more about NFTs, and I mean, I haven't seen
Well,
anything in particular picking up there. So
I'm personally looking at like copycat NFTs like the V punks, but like on new blockchains and networks. Like we had the crypto punks. People want to get into like V punks. What do you guys think about like copycat NFTs like that?
uh,
I mean, you want to go first?
again, this is subjectively my opinion, and I can understand why it's done. It's the same reason why, for example, people still want to be part of the big thing that's happening. When people have Gucci bags and Gucci watches and belts and whatnot, but they can't afford them, so they go and buy the knockoffs because they still have Gucci. They still, have the impression that they own it, but they buy something that's more within their own budget, within their own price level. So I can understand the mentality of it, and there's absolutely nothing wrong with that. But in the end of the day, you're not actually owning the thing that you want to own in the end of the day. So a lot of the knockoff collections, well, to use fashion parlance, so
Yep.
you've got your base C and you start, or you've got your crypto punks and you've got the V punks, or I don't know, something else punks. They of course want to capitalize on the punks brand and of course offer something else. Personally, I don't see much value in that. I mean, if because the whole point of NFTs is that they have, uh, if they don't have much utility, like for example, CryptoPunks do, but they do have an established brand name, and that's the premium that a lot of people are paying for because by some people they're seen as a piece of collective zeitgeist, something that has implicit value, and it's a form of storing their value in that sense. Because actually, we saw that despite everything with capital markets going down, DeFi, bonds, commodities going up. NFTs actually are pretty resistant when at least when it came to the overall bear market. I mean, we've seen a lot of stocks like Netflix and Coinbase and Shopify, lose 80 to 90% of the value, while CryptoPunks probably lost 20, 30%, which is still a lot if you think about it, but not as much as 80%. So that's the value of those NFTs. When you have an imitation of those, they don't have the same value. So I wouldn't think that when you buy one, if you if you like it for the art or the community, or you want to invest in it, that's absolutely fine subjectively. But if you want there to be part of the whole CryptoPunks and have the bragging rights, so to speak, of owning a CryptoPunk, then uh, I don't see much correlation between this and owning an imitation. But that's my subjective opinion. If anybody else sees it differently, they're welcome to, of course, express their opinion.
I mean, I straight away don't like them. Like I don't like fake Gucci or Louis Vuittons in the real life. Like I really don't like copycats. However, and it's a big but, and let's always keep our minds open. There is room for opportunities. Like if you can catch the trend before it explodes, you can make some gains. Like let's not be fooled. But at the same time, it's a dangerous game because you might be thinking that okay, it will follow the same cycle that CryptoPunks. Like first it goes to 3 ETH, and then I'm thinking it will go to 10 ETH and then to 20 ETH. Maybe it's not because it's not going to have the same effect of a full roadmap utility type of brand Web3 brand project. Whereas this is just a fake that is going to have basically one burst and then it's going to go down again to zero, or maybe not to zero, but you understand my point. But I mean, at the same time, there are really interesting copycat projects. There is Moonbirds, right? You know Moonbirds, and at some point last month or a couple of months ago, a project came out copying the Moonbirds, but it was artificial intelligence creating art based on the Moonbirds, and I really like the art. And the Moonbirds founder actually came out to see, guys, I really love what you're doing. Just please change the title, and now they are named AI Nightbirds. If you want to go, to search that on OpenSea, AI Nightbirds. And basically, it follows the same art of Moonbirds, but with artificially intelligence created type of art. And this is the type of collection that, although they are copycats, they could add some value in the sense of art, or maybe in the sense of utility, or so on. But I mean, yeah, we always see, like when Azuki came out, also a lot of anime trying to copy Azuki, or simply a Bored Ape trying to flip them. We saw also the writer novel that came out last month around the copycat project of the Bored Apes. I mean, to be fair, I don't really like them, but also I acknowledge that there are opportunities out there to profit on those type of projects.
My one criticism to the copycats, I'd say, and this is a not based on taste or any potential social, but an economic criticism, is they oversaturate the market. And because there are a lot of very cheap, low effort knockoffs, it is very hard for genuine collections to break into the market. And it also devalues the name of the industry as a whole. We've seen something like this happen, if you remember, or if you're interested in games at the time. In the 80s, when Famicom or Nintendo came out, depends in which region you're in, because they were the same console but named differently. And the market was just flooded with low effort, cheap games. A lot of them, have been made over the span of a weekend. And it got to the point where it just literally buying anything was seen as a waste of money. I think the most famous one was when a game called ET came out, and the game was so bad that essentially the cartridges were that at the time cost like $20, but they became worthless literally overnight. And first of all, they went from 20 to 10, then they were thrown in bargain bins for 10, 15 cents, and then in the end there's literally like a whole giant pit somewhere where they literally just buried them in concrete somewhere in Nevada.
Yeah, I've been very interesting thought. I've been also looking at utility NFTs like the full send meta card. They're
Yep.
talking about building gyms and whatever else. What do you guys think about that world? like pop-up events and
That's a completely
concerts.
yeah. I mean that's a completely different story. That is what I think it's going to be probably the next big hype cycles around NFTs. We saw first hype cycle around avatars, then we saw second hype cycle around metaverse projects like lands in the virtual worlds and so on. Third one, I think it could be related to utility NFTs, and also not only around the NFT space, but we are seeing how brands, traditional brands and big brands like Lacoste, like Hyundai, like McLaren, these big brands are launching NFTs that are going to give holders utility at some point within their ecosystem that they are building. And this is because these brands are already acknowledging and preparing to have Web3 features, and who knows, maybe even metaverse, blockchain metaverse features in 2 or 3 years. So, talking about, for example, the Hyundai, the Korean manufacturer of cars, they will launch a metaverse platform where the holders of the NFTs will gain special discounts when buying a Hyundai car, or will have special. Uh, they will have access to events. They will have access to promotions, or maybe Adidas will also launch into the metaverse, and owners will receive special clothes. They will be invited to special concerts and so on. So I'm thinking we're going to see a big hype around this type of projects, and yeah, it's actually also a good time to be invested in this type of. And actually, Boris, you wrote about the MOVA Mint Pass, right?
Yeah, for example, what they do is what would have been my answer to that question is that they got the Mint Pass, for example, a very, very unique take on how to use NFTs in their utility is that they essentially did a double-pronged approach to this. Is that when they only released 1,000 of those, but when you buy them, it has both sides of the utility. For example, it's made by and the name of the project leader unfortunately escapes me, but she's an acclaimed New York artist because she wanted to get into NFTs and on the Web3, and it like the learning curve is very steep. So what? Sorry, I have to quickly look up what her name is. It's embarrassing having to uh, only refer to the person in the pronouns. Yeah, Nina Abney. There we go. Sorry. Yeah. So Nina Abney, essentially, what I said, she's an acclaimed New York and Pan American artist. And then when she wanted to break onto Web3, she found the learning curve very, very steep. So what she decided to do is that, what if I would create a platform for collectors, because investing in art and art actually in of itself has been an asset that many affluent people invested in. One of the more famous ones, even Jay-Z wrote a song about it, how he bought a painting and then it literally appreciated by 100% in the span of a couple of years. And then there are a lot of trading platforms for that. Masterworks is one of them, where people just basically you can buy fractional pieces of art, and when it appreciates or is sold, you receive proceeds from that. And she wanted to create something similar. So if you are a collector, you're holder of this NFT, you get the prime pickings by acclaimed um, gallery owners, where they present you with the prime pieces that will, with high likelihood, appreciate in the future, and you have first dibs on buying those. If you're an artist, however, and if you want to break into the Web3 and into NFTs, they have a whole slew of professionals who are in the industry as artists, as developers, as just NFT artists in of themselves, and they're going to help and guide you along the way on creating your own successful project. So the utility is twofold, and you can be both people at the same time. You can be a collector and also an artist in your own right. And I think that's great utility for the people that would want that.
Yeah. Mixing in the real world with virtual world, with the with the metaverse, and like you're also investing in the brand in itself, and community driven brands, right? Like when I'm talking about Full Send, like their meta card, they already have a huge online presence, let's say on YouTube, right?
Yep.
And I mean, they got their alcohol brand, and their community is very huge. They do these the clothing drops, and they get sold out in a day. And I've been watching their NFTs, and I'm like, they're not going down in value, And just looking at NFTs with real utility, it's just like they're holding up really well. And yeah, the copycats NFTs are not very, they're not sustaining their value.
Yeah.
Like, yeah.
Yeah, I mean, natural. Like, it's a similar phenomenon what we see with blue chips. Why we call them blue chips in the first place? It's because not because the art is good, because there are a lot of projects with really good art that are really just like NFTs for the sake of being NFTs. But these projects, first of all, they have a really Web3 brand behind them, a team of Web3 collaborators that really know what to do in the space. And you put the example of the Mint Pass time Mint Pass. They really know how to nurture their community, which is essential in Web3. They are starting to give you utility in the sense of digital items, which means there are items that you can wear in the physical, in the real life, but also at some point you will be able to use them within your with your avatars in the metaverse. So they truly understand the narrative, and this is something that blue chip projects really achieve, telling a story around their brand and converting them into the Web3 space, right? So this is really, really similar. Of course, let's say the exclusive factor of having an avatar, it's not the same because it doesn't necessarily tackle the human psychology factor of, okay, I have a Gucci bag. It's the same of me having a Bored Ape avatar. It's literally the same psychological effect. But in the Mint passes, it's more like getting in time and choosing your projects that you know that they are going to be rewarding you in the future, that you know that they are building something planned and they are becoming a Web3 brand. Like like the example that you mentioned is, I think, is a perfect example.
Yeah, and then also with like NFTs in the future, like you talk about avatars and like communities. Let's say, like example, LeBron James or whoever has a Bored Ape yacht, right? And then you own a Bored Ape as well. And you have the avatar character, and they have. They're gonna have events in the metaverse, I'm assuming, and then
Yep.
you're the avatar. You have direct access. You can like directly communicate with other like celebrities and like name people, right?
Exactly. Imagine the power of that, of jumping
Yeah,
into in the early days of Bored Apes. I
just
remember
status,
some some friends like, it's crazy. Like, I've been chatting with Steph Curry and Kevin Durant, and just because I'm in the same Discord server that they are, and it's because in the end the NFT is breaking the barrier between celebrities and regular people through NFTs. So it's also a really powerful message in the end.
Okay. Yeah. Well, thanks for answering my questions, guys.
Hey, no
It's
worries.
Oh,
Thank you
first
for
time getting the chat.
starting the
So
conversation. Oh, yeah, sorry.
no, thanks, man. It was really, really nice questions, and actually, we follow up the narrative that we wanted to talk about, how NFTs are evolving from the Terra, and yeah, they were affected. If we look at the volumes were down bad. Only 1 billion in trading volume in June. The first time it happened since June, actually, from last year, when we failed to hit 1 billion in trading volumes. But at the same time, there are bullish cases playing out, like the appraisal in value of blue chip. If you hold a blue chip avatar, an NFT, it acts more as hedge against the downturn of cryptocurrencies. Not in terms of US dollars, because it's also decreasing because ETH is really not doing well. But in terms of ETH, the Bored Apes, the Mutants, the Doodles are increasing. So they are paying as a complete, total different asset class. And also the things that you mentioned about utilities, but also how music is going to be impacted by NFTs, how tickets are going to be used in events for your as NFTs, and so on. The use case of NFTs is still really, really bullish for the future. And although Terra and all the entire crypto market really played a downside effect in recent months in the NFT market, there is still a good optimistic reason to be bullish about this space in the future.
Yep. For me right now, I'm just looking at NFTs, DeFi, and then layer one protocols right now as far as the short term. So
yeah, super fair. Also, you should be looking at blockchain games because that is
play to earn. Yep.
Yeah, I mean, still play to earn, but I mean, we normally talked two times a month in this space about games, and we're normally giving you guys updates about the upcoming blockchain games, and we are now about to see the next wave of blockchain games that really look like video games coming out of Xbox and PS5 or PC that people are not going just to play to earn, but they're going to play and earn in the process. So it's also a thing, a paradigm that I think we're going to see shifting towards the next year. But yeah, I mean, right now DeFi is a bit punished by the entire situation, but it's good to know that people is still engaging with that because yeah, it's still going to be there in 3 or 5 years. I can bet.
Yep. Okay. Thank you guys.
Thanks, man.
Yep.
Okay, Boris, that was a nice interaction, and time is running out. Any closing thoughts you want to mention before we close?
Yeah, my one thing is that with everything happening, and I can pretty much hear all the people, well, all the naysayers from traditional markets saying, well, you see, this is exactly why we should regulate crypto. This is exactly why if we only had more regulation and more oversight and more people in Congress making up their mind about this, or whatever the regulatory branch in your respective government is. But then I'd like to remind you that this exact thing happened last year with GameStop, where essentially we had hedge funds who were over leveraged, who short sold 120% of the actual stock. So they sold 20%, they shorted 20% more stocks than there were actually were in circulation. Then, when somebody found out that they were doing this and decided to bet against them, he convinced a lot of other retail investors to bet against them, and then it created an upward spiral where one short call got knocked out. They were forced to buy because they were forced to buy. The price went up. It knocked out other shorts. They were forced to buy, and then this created an upward spiral. And this essentially liquidated a lot of hedge funds. Honestly, a lot of people lost a lot of money. So the collusion that happened there, and I believe they're still being investigated, that, for example, a lot of platforms like Robinhood and many others in different countries, they essentially stopped the retail customers from being able to buy any more stocks. You could only sell them, but who is the counterparty who you sell them to? Institutional investors, the whole hedge funds. And so to this day, it's is one of the more glaring issues that happens in traditional finance. And regulation, well, having an oversight and some kind of security, knowing that you're dealing with a fair party, on the other hand, is always good to know. But it happens regardless of which industry you're in, whether it be crypto, traditional finance, whether you're dealing with art, whether you're buying cryptos. or NFTs. Just buyer beware. Always do your due diligence. Always make sure that whatever you're committing your finances, it's something that you are aware of the risks and you're okay with. Should things go south, the loss is not going to be catastrophic to you and to your financial well-being.
That sums out it perfectly. Thank you, Boris. Okay, so I also want to give a big thanks to all of you for being active in our community. And I want to thank Boris for again for your valuable insights. And remember, each week at the same time, Market Movers discussing different trends and topics affecting the crypto market, and the DappRadar Meet sessions, where Ian talks down with relevant blockchain projects in his AMA weekly events. Also, don't forget to subscribe to our newsletter and social media channels: Twitter, Discord, Instagram, YouTube, and TikTok. And that would be all for today. Wish you a lovely evening and have an amazing weekend. And until next time.
All the best. Goodbye. Have
Bye.
a nice day, evening, or whatever to everyone.